Right. Morning, everyone. Welcome back to the Morning Kappa at 8. I'm Joseph here. So yesterday, what we do see is a very interesting price actions. The Hang Seng Index managed to stage a rebound, right? It has uh climbed. Uh, it has rebounded as of yesterday price actions, but what we do see here is that it has yet to cross above the 20 and 50 days moving average lines. Despite that, what we do see is that based on the Hang Seng Index, I can see that the rebound mainly contributed by the tech stocks, i.e. the 1810 Xiaomi, 981 SMIC, Meituan 3690, even Tencent have a 0.1% return, and Alibaba 9988 a 0.5% return. So this is exactly what we have been awaiting for the past 2 weeks, that we want the tech stock to take the lead, right? As the tech stock have a higher beta. Meanwhile, we have been saying that the banks right now is acting a more defensive play in the Hong Kong market. As the tech stocks right now have the bullish momentum re-accelerates, we do hope that the Hang Seng can cross above the 20, 50 days moving average and resume the upside movement towards 26,500 point level. Now, meanwhile, just to recap that the market have underwent one rebalancing, reshuffling recently, as the November month have ended 4 days ago, right? So right now we are in a new month cycle. Usually the December month is bullish for the Hong Kong market as well as to the Malaysia market, right? And so in this bullish month, we do hope that the both indices continue to scale higher, right? And as for the S&P 500, right, despite the discussions about the these are AI is overheated, right? S&P 500, the XPX continue to power higher. So yesterday it managed to climb above this 6850. Now you see that during this week, right, based on what we see last week, the volatility. So this week, this is the range from 730 to 6668. This is the range that they can trade, right? So based on what we see right now, the index continue to move upwards. Also, um, if you look at the S&P 500 yesterday, right, in the broad base, right, out of this 500, visually you can see that more greens than red, right? So the market really have broad base of stocks actually lift the counters higher. Now, one thing that we do notice that market stocks can't forever going up. There'll be a rotation play. So about 1 week ago, the XPX was lifted higher by the memory counters, Micron, and the WDC, right, have actually lift the counters, and also Intel, they have lift these counters, the index higher. And right now, the funds actually are taking profits, moving out from this counters to a laggards such as the Meta, Tesla, Nvidia, right? So this is how the rotations play in the market. So in the market, you must always remember, right? Take profits when your stocks go up and then move to a lower liners, or the stocks actually at a lower level. I wouldn't say cheap, but at a lower level, and that's where the rotation play will keep lifting the index higher. So this is what we see in the US market. If US market behave this way, I believe that Malaysia market will believe this way as well. Just about 1 minute, we are going to move into the Malaysia market. So look at the Oracle, right? Oracle is one of the counter that we have mentioned the past 2 weeks, that their CDS, right, cost of insurance on their bonds have actually went up, right? And that's why the Oracle has actually fell from 300 US dollar, right, all the way down to below and 210, right? And last week or beginning of this week, they actually have a gap up. And if you attend this morning kappa a few days ago, I did mention to you that this gap up carry a very significant meaning, right, on the market, right? Not only Oracle itself, but on the whole market itself, right? If this gap, the Oracle can sustain here and move higher, right? Overall market should stay bullish, and you see that today, right, on which is on the Thursday night, right? The Oracle managed to actually climb above 210. You see, the movement is actually a very small movement, but this small movement give a very strong confidence to the market, and you can see the overall it has managed to lift the index higher, right? Um, so in the technical world, right, this is how we see all these small little signals that actually can give confidence to the market. In this market, I think one of very important things that I learned from all these successful fund managers or the senior, right, the retired analysts, they actually mentioned one keyword is that the market need confidence, right? So this Oracle have managed to install confidence in the market. That's why the US market continue to move higher. Now, despite that underlying, there are two issues here. Number one, in the US market, you look at the SOFR, which impact their money market fund, have actually go a bit haywire for the last few days. The bond actually went up. So that shows that there's a bit of liquidity tightness in the market just before the Fed go into their meeting, but that does not um, the fear or the liquidity crunch in the bond market did not transpire to the equity market due to all these small little movement that the market is still actually trading on. Now, next week, when we come back to the market again, of course, we'll be looking forward to the Oracle earnings. That will be the final D-Day. And of course, next week, we're going to have the 10th of December, which is the Fed meeting. So overall, I think tonight, Friday night, evening sessions, US remains bullish as well. As for the FKRI, we still keep a bullish bias, and we have moved our stop loss higher to 1,006. Reason being is that after the November uh, end of the 28th November on the rebalancing day, right? We think that a very strong support should have formed on that last day, and from that day onwards the market should see on the outside, but the last 2 or 3 days we have three heavyweight counter PCAM as well as the Naga have experienced a very strong selling pressures, despite that the banks have actually went out, and in the end, right, that two heavyweight have dragged our index lower. So right now the FKRI have close below the 50 days moving average, but still keep a bullish bias until the 1,006 level is reached. Okay. Now, as for FCPO, right, since yesterday, one of the market surveyor mentions that the uh, the palm oil have inventory issues, right? The export market is still very weak, right? So the FCPO have experienced two profit takings days in the past. Nevertheless, we still keep our 4,250 stop loss point unchanged, and overall we keep a bearish trading bias on the FCPO until it managed to break above 4,250. In terms of short term, right, I do notice that there is a bit of better demand, as we can see the 3-month and 4-month spread charts have actually moved higher, but overall it's still below the zero mark. But at least for the past 1 month, right, market is actually pricing that demand will actually outstrip the supply, right? So we see how the FCPO develop afterwards. As for the Malaysian market, we have to mention that one of the cases that the finance stock has been actually moving up. And interestingly, the utilities have been coming down. So if rotations happen in our market, right, the finance stock should actually reach a very high level. And once they reach a very high level, right, and then the funds will actually come back to the laggards, which is the utilities. Okay. But at this juncture, I think that have not happened yet. I think there's still more room for the finance stocks to actually move higher, as well as there's still a bit room for the utilities to actually move lower, right? So let's see whether this can pans out until the mid or end of the December. So today we just take a bit of time to actually look at the Tenaga. So what happened yesterday, that is something quite interesting, is that Tenaga have actually came down very sharp bearish resistance. Now when the market closed at 5 plus, we notice that there are about 2.5% of shares change off market, which is the DBT have actually changed hand from one big fund to another big fund, right? 2.5% to one blue chip stocks is actually quite a lot of money. Total about 2 billion ringgit have been transacted. So whether the selling continue, right, I can't tell, right? But look at the share price right now, 12.50 is actually quite a very interesting level. So we just continue to monitor whether there will be more big lots traded in this counter as this juncture. 12.50 and 12 ringgit, this band looks attractive, right? No doubt the trend is actually moving downside. But based on the analyst report, right, the counters look attractive right now. And also, when this DBT have actually changed hand, I think from today onwards, right, Tenaga can actually flip at any point in time between 12.50 to 12 ringgit. So we just continue to monitor this counter. I think yesterday quite a lot of you guys have been asking about Tenaga. I think the key point is here whether there will be more these kind of big lots transacted in the market. If the selling pressure is done, then on the counter should flip on the upside. Whether it's done, I can't tell now, but this is the signal that we see starting from yesterday. Right, and as for the trading counter this morning, firstly we look at Leong Hub, right? Leong Hub has reached 70 cents yesterday. Based on the past 1 week, volume has been very strong, right? Potentially, Leong Hub will be looking at R1 at 71 and followed by 80 cents. So this is the second breakout for the past 1 month, and on the downside, we look at their recent low, which is 66 cents at their support level. Now then on WTK, a Sarawak-based company, right, have reached 70 cents on the back of high volume as well. So the breakout to expect that WTK to test R1 76 cents and followed by 83 cents. Downside support is at 63 cents. So we have two breakout stock, Leong Hub International together with WTK. Okay, I'll stop here and pass on to Eddy on the healthcare sector rep. Thank you.
Hi, good morning all. This is the third quarter 25 results wrap for the healthcare sector. Overall, we are still maintaining our overweight stance on the sector. Topic remain unchanged at KPJ. The sector results for September 2025 quarter were broadly in line. The effects of payer pressures are visible with a clear shift towards daycare models that are weighing on inpatient volumes. Still, let's talk about domestic inpatient growth first. In terms of sector domestic inpatient admissions in third quarter, it has actually slowed to 1.7% year-on-year growth. Second quarter, it was at around 2.2% year-on-year. This comes in at the payer pressure that is driving the structural shift in case mix towards daycare. KPJ appears the most impacted. On a year-on-year basis, they are down close to 0.1%. Nevertheless, the revenue intensity for hospitals under coverage continues to trend upwards on a favorable mix of higher value cases, efficiency gains, as well as a steady pickup in medical tourists. In terms of third quarter 25 margins, domestic for the Malaysian operations, EBITDA margins actually dipped marginally, 0.2 percentage point year-on-year down. Again, this is weighed by the payer pressure as well as hospitals still under gestation. So both operators, KPJ and IH, are sharpening cost control and scaling up centralized procurement of medical devices, consumables, and pharmaceuticals to defend margins. So looking ahead, we do believe that the structural shift towards daycare could likely underpin longer-term EBITDA margin expansion, as daycare offers greater efficiency and lower overheads. With adequate scale, daycare margins are typically higher, while it frees up, inpatient capacity that could be redeployed into high acuity or surgical cases, addressing capacity bottlenecks while still being payer-friendly. In terms of our top pick, as I mentioned just now, KPJ is still our preferred pick. We still favor KPJ for its superior margin and ROE, rising revenue intensity, and growing contribution from maturing hospitals, providing better visibility on near-term earnings and margin expansions. Despite the recent consensus miss for KPJ, the share price pullback presents an attractive entry point, in which KPJ now trades at a 13.6 times a 12-month forward EV/EBITDA, which is reasonable at plus 0.8 standard deviation above its 5-year mean. This is at a 4.4% discount to IHH. That's it. We continue to like KPJ for its solid turnaround and as the strongest proxy to Malaysia's thriving private healthcare landscape. We also maintain our buy call for IH for its consistent execution, premium regional footprint, as well as affluent patient focus that underpins its earnings resilience. Meanwhile, on pharmaceutical, we only cover one stock, which is Duo Pharma. We still like Duo Pharma for its solid earnings visibility, resilient pharmaceutical demand, as well as Duo Pharma is set to ride on margin tailwinds into 2026. All in, we are maintaining our always stance on the sector. Again, topic is KPJ. Key downside risks here to our sector includes higher than expected operating costs, lower than expected patient volumes, and revenue intensity growth, as well as adverse regulatory changes. In terms of movement of USD, should the USD weaken meaningfully, IHH may face adverse FX translation effects on overseas earnings, while Duo Pharma could benefit from the cost relief on imported APIs. That's all from me. I'll pass it on to the next speaker. Thank you.
Hi, morning everyone. Let me continue with a results update on VS Industry. We are maintaining our buy call with a new target price of 65 cents. VS reported their first quarter FY26 results yesterday. The year end is July, and the results were essentially below expectation due to a slower than expected recovery pace. Core net profit came in at 26 million. This is down 16% year on year. And note that we have adjusted for a 5 million worth of reversal in impairment provision that was made last quarter in relation to the final payment of an exiting or discontinued customers. Results-wise, we saw a strong Q-on-Q rebound from the loss-making position last quarter. Sales rose by 26%. This is due to the low base in the fourth quarter, which was dragged down by order deferments by key customers ahead of the final US tariff decision. In addition, I think this quarter, VS also started new production lines for key customers, and hence overall utilization rates were much higher as compared to last quarter. Besides that, the Philippines operations in terms of the losses have narrowed quite significantly, and HT Press, due to the higher take-up internally, the losses have also been halved to 2 million this quarter. So with all this, we saw a quite significant earnings turnaround from the losses in the fourth quarter. Going forward, we believe second quarter should see a slower earnings momentum given the softer seasonality, but volume should pick back up again in the second half. In terms of the losses of Philippines operation, it should further narrow going forward, and we expect it to break even by end of FY26.
This is considering the commencement of second model in Philippines and the progressive ramp up of its upstream parts production like plastic injection and PCBA, etc. In Philippines. Meanwhile, management shared that the progress in Philippines is encouraging, and so far the production yield and efficiency in Philippines are meeting customers' requirement and standard. Elsewhere in Malaysia, we expect more production lines, new production lines to begin in fourth quarter as key customers launch new products. And the newly secured pool cleaning customer should also start in fourth quarter and start contributing to fourth quarter numbers. With all this, we look forward to a robust earnings jump in the second half of FY26. Post results, we revised our numbers down by between 5 to 14% given the slower than expected recovery pace. Our target price is adjusted down to 65 cents, which is based on an unchanged 15 times forward PE, slightly above the stock's 5-year mean, but at a premium to close peer SKP resources. All in, we maintain buy with a new target price of 65 cents. That's it from us for today. Thank you so much for joining us. Happy trading and have a good weekend. We'll see you in the next morning kappa at 8. Thanks, everyone.